Two profitable strategies in one simple indicator. First, a reversal strategy, entering right before the big moves. Second, my favorite, is a trend-following strategy, profiting from each pullback. Watch the video carefully, because I will explain exactly how to use this brand new free indicator that is quickly gaining popularity on TradingView. If you find this video valuable, remember to subscribe. Let's get started. Go to TradingView and open any trading market that you like, in any time frame. I'll be using the price of GBPJPY on the 1 hour time frame. Next, go to the Indicators tab and search FRAMA channel. It's going to be this one, by Big Beluga. Now, after adding this indicator to our chart, the candles might be glitched and not show the different colors. That is because the original candles are covering the colored version. You can still trade this way, but if you want more clarity, you can go up here and click Hide. The price will remain the same, only the colors will be changed. So, what exactly is this indicator? The core idea behind the FRAMA channel indicator is to use the fractal nature of markets to adapt to different market conditions. By creating a channel around the FRAMA line, it not only tracks price trends, but also adapts its sensitivity based on market volatility. When the price crosses the upper or lower bands of the channel, it signals a shift in trend direction, indicated by the up and down arrows. But if the price remains within the channel and barely moves, the market is likely ranging, which will be indicated by a gray color. This adaptive approach makes the FRAMA channel effective in both trending and ranging market environments. Now that we know what this indicator is made of, how can we use it to make money? Well, I'm going to tell you, but before we do that, let's optimize the settings. The length determines how fast the bands react to price movement. A shorter length may produce more fake signals because it makes the indicator super sensitive to the price changes, while a longer length may provide fewer, more accurate signals, but may lag behind the market. So finding the golden middle between the higher and lower values is essential. For the first strategy, we're going to set it to 90. The band's distance, as the name suggests, controls how far the bands are from the main FRAMA line. Higher distance results in less and stronger breakouts, while lower distance gives more breakouts, but at the same time, more false ones. We're going to set it to 1.7. Also, let's set the signal's data to show average volume, so that we could see the strength of the entry before taking it. Everything else is for cosmetic effects. You can configure it however you want. For the first strategy, I'll show you how we can trade this by catching reversals. This one is very simple. A buy or sell signal will be generated when the price crosses the FRAMA channel up or down. Your task will be to confirm the signals using your knowledge, price action, or other indicators. When you backtest it yourself, you will start to understand which signals are good and which are bad. Next step will be the risk management. Since we are trading reversals and trying to catch huge moves, I recommend using a trailing stop loss or quickly setting your trade risk free at a 1-to-1 risk to reward and taking partial profits as you go. Again, after testing this by yourself, you will find the best way to do it that fits your style. For the next strategy, which is my personal favorite, I will go to the 5-minute time frame. Now we will be using the indicator's ability to spot trends and to precisely filter out all the consolidation, which is usually the biggest problem for a trend-following strategy. Let's optimize the settings. Go to the indicator settings and change the length to 58 and the band's distance to 2.2. Also for this one, we will need to see the real candles, because their color will be important. Go up here and unhide. Go to the indicator settings and uncheck the color candles box. Now for the entry rules. Pay attention. In this strategy, we will be profiting from pullbacks. This indicator alone does an excellent job of filtering out false pullbacks. Each time the pullback goes too deep, it instantly highlights it in gray. So, let's look at the middle line. This will be where you want the candles to pull back to before continuing the trend. A pullback counts if the wick of any candle touches or goes below the middle line without closing below it. Our entry will be on candle that moves in the same direction as the trend. For example here, we will enter one candle after the rejection. We will set the stop loss at the last swing low or just below the candle, because from my backtests, I've observed that this strategy has minimal drawdown. It either moves to the take profit with the trend or hits the stop loss if the trend abruptly ends. For our take profit, we will target a 1 to 1.5 ratio. Trends don't last very long, so it's better to capture short and quick moves. If you have any other methods for trading with this strategy, make sure to backtest them and let us know how it goes. Thanks everyone for watching. I hope you learned something new. If you did, please like the video. It keeps us motivated to create more content to help you all. Take care.